Do you know the RSP deadline is approaching very fast for 2024 tax year? And you must be knowing that you have been already paying advanced taxes to the CRA, which you're going to get back once you contribute into RSP account. Do you know how much you're going to get in your RSP contribution once you contribute into it? Do you know which marginal tax rate you are in? Do you know your marginal tax rate, on which basis it is determined that how much you're going to get back from RSP once you deposit into that? Do you know that are you the right person to contribute into RSP, or is there any other vehicle you should use to track or grow your money? So I'll be talking today about how much you should contribute, some tax bracket, how much you got contributing, and how much you're gonna get back from CRA once you contribute, and how much it may grow or should grow when you retire, because it's a retirement planning, right? And also this is also some sort of a planning which you can use towards your first time home buyers plan as well. So watch the video until the last, because you're not gonna miss a single point in this video. So you must have watched some of my videos which I have already discussed about RSP. And purely this is for Canadians actually. You know, in US it is not RSP, it's IRA, right? So there is something different in US versus Canada. So I'm going to be especially talking about the Canadian perspective. So if you have watched that video, I'll be more specifically talking about what exactly RSP and who should use it. Okay. So an RSP is a retirement savings plan, which is registered with the Canadian government. And what it does is, based upon your income each year, you get a contribution room to deposit for getting your tax credit back. It defers your tax bracket. It gives you a tax credit back. So what happens when we get a salary from our employer deduct a certain taxes at source when you get that money to your account, right? So you're already paying advanced taxes to CRA. Whether you should be paying it or not paying it, no matter what, you have to pay it, because this is the obligation to your employer that they should deduct a certain percentage of your income and deposit to CRA account. So you've only been paying advanced taxes entire year, okay? Now the time comes when you get the contribution room based upon your income each year, you should deposit this money into RSP account, and based upon the deposit and your marginal tax rate, you get the tax credit back. Means you get the money back from CRA, which you already paid in advance to CRA, okay? So basically this is the RSP, and also reduces your tax bracket. So for example, you're on a 40% marginal tax rate, you put the money into RSP, it might bring your tax bracket to 30% or 35%. So that is also one of the good thing about RSP. Third thing is it grows tax deferred. So as long as you're investing inside the RSP, it grows tax deferred, because if you're going to be investing in, if you're putting into just savings account, not doing anything, right? But if you're investing in a certain funds or stocks or bonds, then it grows actually. So growth is not taxable, it's tax deferred. So means, for example, a person is starting RSP contribution from early age is 25 and he's keep on saving until 65 based upon the respective years of RSP contribution limit, he accumulates a large sum of nest egg when he retires, and that time he uses that RSP to fund his retirement income. I'm going to be talking more about it. So now the question is how much you should contribute into RSP. It is purely based upon your income, your tax bracket, your goals, that actually determine how much you should contribute. There are certain people who should not contribute into RSP because that's not the right vehicle to use for our retirement income. For example, if you are making $60,000, so 18% of your gross income is kind of your RSP room for respective year, and it is each year defined by the CRA up to a maximum threshold. So 2024, the maximum RSP contribution is somewhere around $31,000, but it has to be either $31,000 maximum, 18% of your gross income, or less than that. So that's a kind of a calculation. The 18% is a point which you should always consider. So for example, if you're making $100,000, so 18% is $18,000, but you cannot contribute $31,000 because you don't come into that bracket. 31 might be the contribution room for the people who make more money, like maybe $500,000 or $400,000, right? Because 18% is less than of that total amount. So this is the way basically we calculate the RSP contribution rule. So now let's take a kind of a break of each tax bracket. So somebody is a 30% marginal tax rate, somebody is a 40, and somebody is a 50% marginal tax rate. So for example, you are a 30% marginal tax and you deposit $10,000 contribution into your RSP roll. You make an RSP account and you contribute into $10,000 into RSP roll. So what's going to happen, because if you're a 30% marginal tax rate, so you're going to receive $3,000 tax back from CRA because you're a 30% marginal tax rate. And similarly, who's a 40% marginal tax rate, they will receive $4,000 back, and who's a 50% marginal tax rate, they will receive $5,000 money back from CRA because they deposit this money into RSP account, right? So this is something which you need to understand on which bracket you are in and how much you're going to get back the tax credit from the CRA when you deposit the money into. So one of the questions actually I usually been asked by one of my clients that, okay, Prasoon, how should I use these refunds which we get from the CRA smartly? And that is very, very important thing to understand. And you should use that money very wisely. And there are certain ways you can use it. Either you can get, if you suppose you're getting $4,000 back, say you're a 40% marginal tax rate. So $4,000 you're getting back from CRA. Maybe you can put that back into RSP and grow that $4,000 again to your retirement income. Okay. Second thing is you can pay your high interest debt. So for example, if you have a debt and your interest rate is almost like 7-8%, it's smart to pay off your debt because that will help you to reduce your overall debt. Third thing, if you don't have a debt, you can fund to your TFSA account. TFSA, why is it important that in TFSA account, all the money which is again going tax-free, and also you withdraw tax-free. So for example, you want to have some large purchases to happen in future, you can put that money into TFSA and invest inside that TFSA, which grows tax-free, right? So that is something also you should do that. And create an emergency fund. Or one of the way you can do that, just put into savings account, some high interest savings account, and create your 3 to 6 months of emergency fund. Though emergency comes very rare, but you should also have some sort of a safety net in the event of, God forbid, something happens to you or your family, you need some emergency fund, you can use that emergency fund to your purpose, right? But I would suggest you also on that recently one of my clients was having trouble and he was making pretty good amount, like his gross income is almost $370,000. He came to me and when I see that one of his check got bounced, because of, sometimes we do spend here and there. So I asked him to go to the bank, where his bank account is, and asked him the overdraft facility. So he went to the bank because his account is with RBC, and he texted me back in the evening, hey Prasoon, you gave me right advice and now I have got $8,000 of overdraft facility. So what this overdraft will do, if in the event of something you need an emergency fund, you can go up to $8,000 above your account balance and then use that fund to your usage, right? That's also one of the good things. So using that return back into investments always is a good idea. Okay, let me share one of the story of my client actually. Mostly people do like that. So you will relate to that as well. So he came to me, he said, Prasoon, I need a $1 million life insurance. I said, why $1 million insurance? So he doesn't have any clue actually how come he reached to that $1 million number, right? So I was asking him, what was the reason? He said, just like that. So similarly, these kind of mistakes, everybody does that in RSP contribution as well. So they have, say for example, somebody came to me and I saw his accumulated contribution rule was almost $70,000. So he said, Prasoon, should I dump $70,000 into RSP rule? But it's not should be the case, right? So this is something very important. So it's not a fit to all scheme. If you want to know like how you can best use of RSP, customize solution as per your need, as per your income and objective of your long-term goal and short-term goal, you can talk to me. I mean, I have been into the business for two decades now, and I have seen so many case studies. I have got so much to share with you guys. So I'll be more than happy to help you out. If you like this video, Please share with your friends and family, like it, subscribe it, and comment if something which you like to learn more about financial planning.